Merrill Lynch.
Against all odds, AIG seems to be on the road to recovery. The insurer is closing a Fed credit line, and the Treasury Department plans to convert its preferred stake into common stock and then sell it to private investors. After selling off parts of the company to raise capital, AIG may now even be looking at potential acquisitions. Steve Miller is the chairman of AIG. He's in New York today to be inducted into the Hall of Fame at the 9th Annual M&A Advisor Summit. I'll be hosting those awards tonight, and I'm looking forward to tonight's event and to your award. Steve, thanks for coming on the show. You've already been given
Thank you for inviting me.
Well, you've already been given a Lifetime Achievement Award for all of your work. You oversaw the bankruptcy of Delphi. You helped Chrysler return to profitability in the 80s. You called your autobiography The Turnaround Kid. How did those experiences compare to what you're trying to do now at AIG?
Well, I think AIG, first off, is far and away the biggest, in dollar terms, company I've ever been involved with. Think of it. We had borrowed $180 billion of cash and credit lines from the federal government as the essential ingredient into allowing AIG to survive and get to this point. So the numbers are just huge. The impact on our economy, had we failed, could have been horrendous, and therefore we're very glad that we were able to accomplish this.
So you said you're about 80% of the way through asset sales there at AIG. When do you expect to be done with that?
Well, when we're finished, we'll be at the point where Treasury has sold off the 93% interest in the equity of the company, and we therefore are completely back into the private sector as a private company. That may take a year or two. Who can tell? It's speculative, depends on market conditions going forward in the stock market and so on. But I think both Treasury and ourselves are anxious to complete that job as quickly as possible. You have to remember that we're talking about, somewhere between $50 and $100 billion worth of equity that's going to have to be rotated into the market. It's far and away the biggest total nut that has to be dealt with, perhaps in history. But we will get it done, because what we've seen recently is a huge restoration of investor confidence in our company.
Well, you just said that process may take a year or so. Once the Treasury turns its preferred stock into common stock, how long does that take?
Well, the conversion is something that we have agreed to. We expect to be able to close on that agreement sometime in the next weeks, or perhaps a month or two into the new year, but we're very close to actually doing that conversion as part of the same transaction where we pay cash to the Federal Reserve to extinguish all the Federal Reserve claims against the company. At that point, there will be nothing left but for Treasury to then sell its common shares into the marketplace at a pace that we would mutually agree is most appropriate, and you just can't guess at it now, because you don't know what market conditions will be going into next year.
Right. Well, given those market conditions, I mean, looking at what Citi just went through with selling 10.5 billion shares in one day in that stock offering, does it make that a more likely option for AIG in terms of Treasury divesting its stake?
Yeah, well, I think the example of Citicorp, the recent example of the Treasury disposing of quite a number of shares in General Motors in what has been regarded as a successful IPO at General Motors, those are good precedents that give increased confidence that we will be able to get the same thing done with Treasury selling their shares into the public market.
Well, AIG just successfully sold, what, $2 billion of bonds recently. Can you clarify for us, because I've seen conflicting reports, are you having second thoughts about another bond issuance, or did that hearten you to go ahead with more?
Well, let me be very clear. We are quite satisfied with the $2 billion debt offering that we put out there. It's what we had worked out as appropriate with the rating agencies. I think it seems like a relatively small amount of money compared to the totality of AIG and all of its capital structure. The important thing, it was the first time we had been back in the market in a couple of years, and what it shows is that investors that now have restored confidence in AIG. If you think back 1 year or 2 years ago, there was no way that AIG could have raised, $2 in the market, let alone $2 billion. Now the markets are open, investors have confidence in the board and the management of AIG, and that's what's been demonstrated. And that, I think, is a good underpinning for the stock sale that we hope will be coming in the next few months.
In the next few months. How far are you from the point of making acquisitions?
Well, I think in the future of this company, as it returns to being a normally capitalized company, attention will once again be turned to possible acquisitions to strengthen the company and give it yet broader market presence. Right now we are instead totally focused on concluding our deal with the government, paying off the Fed, getting these Treasury interests converted into common stock, and that, I'd say, is kind of our total focus at this time. We do not have any acquisition targets in mind at this point in time, just a general notion in the future that'll probably come back into play.
And lastly, before we leave you here, sir, you stand ready to step in should AIG's CEO, Bob Benmosche, not be able to serve due to the cancer that he's fighting. Can you tell us anything about his current health or his current treatment? How's he doing?
The answer is he's doing terrific, and he is both very personally committed, wanting to make sure he stays on for the next couple of years to the point where Treasury is completely out of the stock and so on. And then in terms of current performance, I've never seen a CEO who's more appropriately engaged in managing the company on top of everything. He's off in Asia for the next week or so, visiting some of our operations in Asia. He sat through 2 long days of budget committee meetings with the company management that I participated in last week. He runs 3 miles a day when he goes out to exercise. This is a person who's showing no signs at this point of any diminution in his health and energy. You can never tell with cancer when that might change, and we have the appropriate steps in mind for how we will deal with it if ever we and Bob came to the conclusion that he should step down.
All right. Unfortunately, I've got to leave it there, sir. Thank you for your time. I know you've been out shouting those around you there at the M&A Advisor Conference that's underway here in Manhattan. Look forward to speaking to you again later this evening. Stay with us. We've got to take a quick break, and we're back in 2.